All right, good morning, guys. Assalamu alaikum. Thank you for coming. This will be our last webinar, number six, about psychology, and we'll even throw in some indicators, talk about indicators, whatever indicators you guys want to talk about, and the few that I've used in the past. But we'll start out with psychology first. So, Bismillah ar-Rahman ar-Rahim. Um, the number one thing that and psychology comes in a lot later once you start trading, but it's important that I go over it now because these emotions will overtake you, will be responsible for you either being part of the 90%, which is the people that lose, or part of the 10%, which are the people that are actually successful in trading and then go on to make a living. Now, when I talk about success in trading, I'm not, you can just describe that as $1 million a year or be able to pay your rent, be able to pay the bills, and work 2 hours a day, 3 hours a day, and stay home with your family, spend time with your family. That's also success. For me, trading has always been about buying more time with my family, like because I mean, time is flying. Time is flying by. I have a 17-year-old who's is off going off to college, but also have younger kids, and I realize that when I'm stuck in work all day, these kids are growing up, and I don't get the best of them, and they don't get the best of me at the end of the day. So at the end, for me, it's all about buying time. If I can make the same amount of money that I make in my regular job and trading with a few hours, then for me, that's success, that's wealth for me because I'm able to spend time with my family. You have to figure out what your goal is. Why are you trading? Are you trading to have side income, which is good? Are you trading to for a goal? Are you trading just to buy a home, maybe, or maybe you need another job? Sometimes living in OC, you need several jobs to live out here because it's not cheap. Or you want to travel the world, and you want to spend time with your family while doing it and have a good source of income. Whatever it is, it's important that you figure out that goal first and then trade. And some of us are like, well, I just want to make a lot of money. And hey, that's okay too. Um, but once you figure out that goal, you have to stick to it because trading is a game of discipline. And unfortunately, we're all human, and we are human. We're not robots. They do have AI bots and stuff that trade for you, but it doesn't work really well because the whole market is us. We are the market. It's us, the institutional traders, the banks, everybody creates the market. So the way the price moves up and down is just psychology of the market, is how people are buying and selling at certain levels, what's going on in their mind. So if you can understand that, then you'll be able to take a little piece of the market without the market taking a big piece of you. Um, so before we do that, we have to try to understand who we are. And this took me a long time to understand. Probably last year, I understood this, that why was I losing a lot? Some years I was great, green years, and some years it was a break even year. I had to figure out why I was doing that. And before I figure that out, I have to figure out what my strengths were, what my weaknesses were, because we all have different personalities. Everyone's different. Some people are very patient, even in their real life. Some people are not, and that will affect your trading. Your psyche will affect how you trade. And I've never really heard anybody talk about this particular thing, but I hope this will make sense. So we'll get started, inshallah. Quick disclaimer, this is not financial advice. This is just education purposes. You click the button for your own trades, not me. All right. So we're going to do something completely different, right? I haven't seen this done before, but we're going to try to figure out what your personality is first. And I understand you'll see four colors here on the screen. You have red, blue, gold, and green. Now, what do I know about personality tests? I don't know much about personality tests, but my actual profession is I run a business and it's in relationships. I help people get married, and I've been running that business for about 15 years. And why am I telling you this? The reason why I'm telling you this is because I have some background in the personality field. And what we did is we created a proprietary personality test for those who are getting married using our software, using our program, using our site. And we wanted to help them identify each other's personalities and see how well they got along. So that's where the personality test came from. The inspiration was the Myers-Briggs personality test, but we've condensed that to a smaller, more sustainable version. So if you can look at the four colors on your screen, and I'll go over each of them. And you can be either one color completely, or you can be a little bit of both, two colors. You can be a little bit of three colors, but you'll have one primary color. For example, the reds. The Reds are your salesperson, right? They're outgoing, they're spontaneous, they're very creative, sociable. It's like your influencer on YouTube. That guy's red. He's always selling, always talking, always smiling, having a good time, right? They're very carefree and they're risk takers. They like doing these things that are very out the box. That's the red personality. Okay. So if any of those apply to you, a lot of them apply to you, then you're red. Now you could be red and then you could be a little bit of the others too. Now, blue. Blue is understanding. They're very friendly. These are your empathetic people. These are your therapists and your psychologists, right? Your red are your people that if you have to go to a restaurant, these are the people that greet you like, hey, hello, welcome, sir. Oh, please, yeah, I'll guide you to the restaurant, right? So these are the people that are very outgoing. These are your marketing executives. These are the people that run the presentations. Now the blue personality are, kind of like your therapist, right? They have blue personalities. They're understanding, friendly, empathetic, accepting, introverted a little bit, diplomatic. They're very tolerant, very patient blue, right? Now let's go to golds on the bottom left. Golds are they're ambitious, right? They're your leaders, kind of like your CEOs, your managers, the people that kind of run the show, our president, unfortunately. They're rational, confident, they're very focused, they're very self-motivated, and they're responsible, right? So you may have some of these qualities. You may have a little bit of gold, a little bit of blue, a little bit of red, but most of the time we fall under one of these personality types. We all fall under one primary personality type and one secondary personality type. So I want you to read these descriptions right here, these words, and figure out which is your primary personality and which is your secondary personality. But we're just going to focus on the primary. And last but not least, greens, right? Greens are dependable, they're thorough, they're very efficient, they're logical, orderly, reliable, loyal, right? And you may think, well, I'm all four. Well, if you're all four, then you're almost perfect, right? But reading these, I want you to figure out what your primary personality is and what your secondary personality is. And I know you're asking, why are we doing this? We're doing this to try to figure out, you know, what we're thinking when we're trading, and how each of these personalities has their strengths. They also have their challenges. And if we can identify what our challenges are, this is yourself looking in the mirror. It's very hard to do that as adults. Look in the mirror and figure out what's wrong with you. Like, what are the limitations and what are your strengths? This will really help you in trading. And like, for example, if you're blue, you're very accepting and introverted and tolerant, then maybe you can stay through a trade through all the ups and downs. You're a little more patient. You're like, it's okay. It'll go back up. It hasn't hit my stop loss yet, you know? So myself, I'm actually a blue green. So I'm more, I guess I can go half half, but if I had to lean, I would lean more towards the green and less blue, but I'm a blue, green, green, blue. So I'll give you guys a few seconds to kind of figure out who you are. But just remember the primary one, right? Remember your primary personality. Okay? All right, we'll go to the next slide right here. All right. So if you figured out your personalities, these are your personality strengths, right? The reds, they're doers, they're givers, they're very confident, they're persuasive, they're entertaining, right? So your blues, they're supportive, they're empathetic, they're compromising, very diplomatic, right? They're very loyal, value driven, right? They're great friends, actually. Golds, they're very responsible, organized, dedicated, dependable, very loyal as well. These are your leaders right here. And green, they're very organized, responsible, loyal. I know you may see loyal a bunch of things, yeah, because some of these traits do have that loyalty as one of their um, uh, uh, strengths as well. They're very trustworthy, practical, intuitive, right? These are the strengths of these four personalities. Um, but they also have challenges and weaknesses, right? So you can remember these strengths, and we'll talk about the weaknesses as well, okay? Here are the challenges of these four personality types. Now, if you're a red, I'm not saying you're 100% this, but if you are red, then you may possess some of these challenges, right? Or weaknesses. I don't like to call them weaknesses. I like to call them challenges, right? So your personality challenges are you may be a little bit disorderly, right? Because you're red, you just want to have fun, right? You may be a little bit insensitive because you like to joke around a lot. So sometimes, you talk too much. So sometimes they may come out. You're argumentative sometimes because obviously you love to talk. So there's a lot of debating. Overburdened, unfocused sometimes, impulsive, quick to make decisions, right? The blue personality, um, sometimes you can be unorganized, right? Insecure, complacent, unemotional, nonconformist, sensitive, like a little bit sensitive. Goals. Goals are also very unemotional. I mean, the best CEOs and the top dogs right here, they didn't get there by caring about everybody else around them. True, you can still care and still be a leader. That's happened. And we see our past, right? Our history. Judgmental. The goals are critical, controlling, impatient, a little bit insensitive. And I'm not saying this is who you are if you're a gold, but remember, we're not perfect. All of us have flaws. And if you have to identify yourself as personality, these are your flaws. And the greens are demanding, they're stern, they're cautious, they don't take very many risks. They're insensitive sometimes, single-minded, but they're perfectionists. They like to just finish things and make it perfect. And sometimes they get lost in the bigger picture. So the people that just came in, what we're doing right here is we're going through a personality test to figure out what your personality is. So I want you guys to take a few minutes right here, or a few seconds, just to take a look at these 4 personality types. And if this describes you, um, then that's the personality type you have. You may have a primary personality and a secondary personality. And the reason why we're doing this is to figure out how this affects your trading. Because in trading, 90% will lose their money, will lose their accounts, will blow up their accounts. Blowing up means it's down to zero or nothing. You can't trade with it anymore, right? And there's only 10% that actually are successful. And success can mean $1 million, or it can pay all your bills and your mortgage, whatever that may mean for you, right? So once you figure out your personality type, we're going to check your strengths. These are your strengths, right? So why are we doing this? One of the main reasons why we're doing this is because if you know your strengths, then you know how you can succeed in trading, right? Um, and if you know your challenges, you know where you're going to mess up. And these are the things. It's tough to say this, but when you trade, you have to be unemotional. Like you cannot be human when you trade and be successful at the same time. It's very, very difficult. It's very difficult. You have to change yourself when you come and sit in front of your screen because you got to understand why are only 10% successful? Only 10%. That's a statistic. I believe it's less, but the only 10% is successful because these guys are different. Guys, girls, whatever it may be, they're different. They do things differently. They don't. You see, these last 5 webinars that I've taught you guys is that's all technical. Everything's technical analysis. You could do that in an intensive live course somewhere any day, right? You can learn technical analysis. You can become the perfect technician. You can know charts. You can know patterns. You can know entries. You can know everything. But if you don't have control over this, your mind, when you're actually trading with live money, I'm not talking about paper trading. Paper trading, I'm a billionaire at paper trading, just FYI. But live trading is completely different. These are your emotions. This is the money that you've earned and saved, and now it's just melting away in a trade. Right? It just melts away. You just hit the button, trade goes opposite way, earnings call, FOMC, some red folder news comes out and it drops, and there's nothing you can do about it. Sometimes you get trapped in a trade overnight, and the next day you wake up, everything's gapped down. It's gone, right? So um, trading is all about rules. It's about having a system and following these rules. So if you can understand who you are, like for example, if you're a red personality, you know that sometimes you can be unfocused. Sometimes you can be over risking. Like, well, you know what? It's easy. If I can make $100, I can make $1 million. So I'm going to all in. So if you're blue, sometimes you're not as confident. You're like, no, 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 I don't want to go. I don't want to. No, I'm just going to take one share. I'll be fine. At least I'll win. At least I won't lose much. So you're always scared about taking risks. But trading is a risk, right? So and I tell the blues that scared money doesn't make money, right? And I tell the reds like you're doing too much, right? And the gold sometimes can be very impatient, right? And I've known a few gold traders. They're very competitive too. They're like, no, I will do this. I will win no matter what. So for them, they love to hold on to losing trades because they don't like to be proven wrong. Go tell your boss that you're wrong about these following things. He's not going to like it very much. He's a boss for a reason because his decision-making skills are on point, right? In trading, it's completely different. It doesn't matter if you're a boss, CEO. It's not matter. It's a completely different game. So play with your emotions. And the greens are just, they're perfectionists. They want everything to be just right, right? They're very single-minded. They're kind of like focused. They're a little bit cautious. So unless they see the perfect trade, and sometimes they'll see the perfect trade, they won't take it. They're like, no, 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 no. The candle didn't close properly. I'm not going to get into this. So we all have our flaws. And what we have to do is identify those flaws and leave them outside your office when you start trading. When you sit in front of the computer, we have to figure out a way to be unemotional when you trade. And that's not going to happen until you get a lot of experience, a lot of losses under your belt. But the reason why I say this is because it took me a long time to understand. I've blown up 2 accounts, lost a lot, gone through a lot of chaos at home. Trading will affect every part of your life, especially if you're immersed in it. I was very immersed in it. I still am, but I have more control over who I am, over my feelings. But it'll completely change. You have a bad day in trading or a bad week in trading, it'll not only affect your regular job, it'll affect your relationships. It'll affect what type of father or mother you are, what type of husband or wife you are. It'll affect you as a son or daughter. It'll affect your friends because it's emotional. You lose, you're like, how can I lose? I'm a loser. I'm quitting. And when you're winning, you're like, you're on Redfin looking up houses in Malibu. You're like, 17.5 million. I think I can buy this. Yeah, I've had 3 winning days. I got it. And then when you're losing, you're like, oh my God, I just want to get rid of my account. I'm worthless. I want to sell all my clothes. Yeah, it's a weird type of vibe. I mean, I didn't think about selling my clothes, but I'm just letting you know. I like this quote right here. I know it may seem a little bit out there, but it says, anything in life worth doing is worth overdoing. Moderation is for losers. This was said by some, it was a trader that said it. He was a 1% trader. But I know it may seem a little bit extreme. But if you look the one right below, it says 90% of traders fail. And that's the market telling you this. That's the market. So when you look at that and then you look back on this and you say, if I'm doing trading, if I'm learning trading, I'm trying to figure this out, and I just went through these 6 webinars, and I'm not doing anything else outside of these webinars, then you're going to become the second quote, right? You really have to, you really have to push it. In anything, and in anything, I believe, in any type of profession, like if you want to be the best, you have to push. You have to become obsessed about it. I'm not saying ignore your family, ignore anybody else, but any free time you have, you have to learn, especially this. It's not like you go to medical school or law school. There are all these rules. You can only prescribe these drugs. You can only say this to the judge. In engineering, you can only program this certain way because you program it, it works. Okay, great, it's working. That's it. This is completely different. You're fighting with yourself here. You're fighting with your emotions. And it's not easy. It's not easy at all. So that's why 90% of traders fail. I mean, out of this group, not everyone's going to make it. And I'm not saying this to scare you, but I said the same thing part of my last webinar, last series that I did back in 2020. And out of the 15 people, one made it. Actually, 3 made it. One became a crypto trader. One's a swing trader and one's a day trader. So it's not bad. 3 is good. And they trade till today. So we'll see how this group does. But all right, let's talk about the 90%. Now, if I tell you that 90% of all Americans, own a car, you can say that most of the public owns a car. That's the average. The average is that everybody owns a car, right? The 90% is the average, is the normal, is the majority, right? Obviously, it's 90%. It's the majority. So when they say the 90% will lose, you have to understand what the 90% are doing, right? What are they doing that makes them lose, right? You cannot just follow the 90%. Everybody on YouTube, everybody trades the same exact way. Everybody trades the same exact way. And nobody trades differently. And the different traders, the 10% that do trade differently, they'll never talk to you. They'll never say, hey, I'm selling this course Please come join my course. Please come join my paid group, $500 a month. Come join me. I'll teach you how to trade. You know, if this guy's really amazing at trading, if the 10% don't do this, the 10% don't create paid discords or paid courses, they're so focused on their trading, they don't need the money from these paid discords. These paid discords and these groups and stuff like that are the 90%. You're actually paying for their stop losses. And I'm victim of that too. I've joined several of these groups looking for an answer, looking for, oh, maybe if I join this group and follow his exact trades, I can do perfectly. If he's winning, I'm winning. That's the easiest thing. It's not. It's not. He may be a great trader, but he's going to risk a lot more because your membership is paying for his stop loss. You have 100 people paying $100 a month. You're making $10,000. I mean, how much would you risk? If you know that you're getting 10K a month, no matter what, whether you lose or win, yeah, there's some pressure for you to do well, but at the same time, you can take larger risks. And then when the rest of your Discord, when the rest of the people follow you, taking the same amount of risk, and they lose, you don't lose. Only they lose. So I would be wary of joining these groups and stuff. I've joined 5, 6 groups, and at the end, I'm just like, I can't do it anymore. I spent a lot of money trying to figure out that this is the golden ticket, the answer to everything. The 90%, they can't handle a loss. That's the problem. It's hard for them to handle that they're wrong. They'd rather be right and the trade keep going south, going past their stop loss, than them be wrong and get out of the trade and actually have a realized P&L loss, right? They hold on to losing trades for a very long time. They add to losing trades. They're like, I'm losing. It's already past my stop loss. You know what? I'll add down here so my average goes lower, right? Once my average is lower, it'll be easier for me to get there, right? That's the mentality that they have, you know. And the problem with this is that you see our brain doesn't like pain, right? We don't like pain, we don't like stress, we don't like anxiety. We don't. So when you're in a losing trade, what do you feel? Suddenly you're like, oh my God, it's going against me. It's going against me. Oh my God, it's about to hit my stop loss. Okay, no, no, no. I'm still good. I'm still good. Tesla will turn around. It will turn around. It will turn around. You always try to convince yourself. You have something called hope. Now, in a life and death situation, hope is great. You know what I mean? You're stuck out there in a desert. You're out of food. You can still survive a few days. You're out of water. You can still survive. But without hope out there, without hope, you won't be able to survive. Here, hope will kill you. If you're hoping for the trade to swing back around after it dropped $5, $6, we're talking about day trading, swing trading here. Let's say you're in a long position and you got into like Peloton, like I did a long time ago in COVID at like $27 and it keeps dropping to 10. You're like, no, no, I'm going to add at 10. It drops to 5. I'm going to add at 5 with the hope that it comes back, and it never comes back. You take a huge loss. Um, this hope is going to kill you. Hope is the last thing to die for traders because they're always hoping that the trade will go in their favor, and it never does. Maybe once in a while it does, but most of the time it doesn't. You got to get rid of those losing trades right away. If it hits your stop loss, you have to get out, right? And you cannot add to losing trades because you're wrong. It's losing. So what the mind does, it doesn't want to feel this pain of loss, right? So what it does is it's like, no, no, just hold on to these losers because if you're still holding on to them, there's hope. That means your brain will not feel the pain, right? And same thing with taking profits now. Let's say you have a winning trade. I just put out a poll on WhatsApp. Not many people responded, but there were like 5 or 6 that responded. The question on the poll was, if you're in a winning trade, do you take your profits? Is the first thought that comes to your mind, I want to take my profits? Or is the first thought that comes to your mind, I want to add to my position. I want to add to this position, right? The 90% say they want to take their profits on winners. As soon as it starts going in their favor, they're up like 5 or 10%, it goes $10 a share. They're like, oh, where can I take my money? Where can I take my money, right? They'd like to take half their profits on their winners, and then they'll leave like 1 or 2 shares, right? And I know I've taught this strategy because that's the strategy that the 90% learn, right? But the 10%, they don't do this. They don't take profits on their winners, you know? They let their winners run. Just let it run, right? And the 90%, they don't add to their winners. Let's say you have a winning trade. Let's say you're doing really well, right? I mean, Don't you want to add to that because you have a runaway trade or a trade that's taken off in your direction? Now it pulls back a little bit, but you know it's just a little pullback, and now it's going to continue going, and you don't add to that. I mean, there's, I think the problem is that we're so used to just seeing the green profit. So the mind here too works in a different way. The mind says, "Oh my God, you're green. Okay, that's good," and they get nervous. And the mind still thinks about pain, right? It says, I don't want you to lose this money. I don't want you to lose this money. So quickly take your profits so you don't lose this little money that you've made, you know? And let's say you do, Tesla goes up $2 and or Nvidia goes up like $1.50, $2, $3 a share. And you have 100 shares and you're like, oh, okay, I'm going to take half off. And then it consolidates and you take some more off and you only have a few shares left. And then in the second half of the day, it runs up $15 or $10. The pain of watching that trade go without you is far worse. It's far worse than taking a little bit of profit. Honestly, I would let that trade run, keep adding to those dips. Let it go as much as possible. Keep your stop loss moving up. Keep moving up to break even, break average. And at the end, you'll realize profit will be a lot higher. This is what the 10% do. This is what the winners do. These are the people that are consistently profitable do. The 90% don't do this. They don't add to winners. They just take their profits immediately, right? And most of the 90%, they spend their energy thinking about how much they will win, right? As soon as they get into trade, it's green, like I said. People are thinking about how much money, they start doing calculations. So if I made 300 today and there's 22 trading days a month, that's almost $6,000. Oh my God, that's $70,000 a year. But wait, if I take 400 shares, I can quadruple that. Oh, dude, I'm going to be rich. That's how they think. They're always thinking about how much they'll win. They're doing calculations, multiplying this, like, oh man, in their mind, they're millionaires. They're billionaires in their mind. When it comes in front of the screen, when it actually is time to do stuff, they're unable to be disciplined enough to get those things. The market is out there for you to take their money. It's money. It's as here. Here's everything. It's up to you to come here into my house, into the market's house, take the money and walk away, right? But but most of us are not disciplined enough to do that. We cannot follow our rules. That's the hardest part. Just following rules. That's it. If you feel that you're a good rule follower and you don't get emotional over money and that you stick to it no matter what, you're disciplined enough to do that, then you'll do great. You'll do great. You're able to do it. My goal has always been simple with trading. I just want to spend more time with my family. I want to buy time. If I can pay for my bills, if I don't have to work of 9 to 5, and I can just work for 2 hours in the morning and 6:30 to 8:30, by 9 o'clock, I'm there with my family. For me, that's wealth. That's success for me. The 10%. Now, I don't know anybody who's personally in the 10%, right? I know consistent traders, so I know a few traders that have been profitable for, let's say, 3, 4 years, right? Maybe one. No. And if you talk to them, they don't really talk much about how they trade and stuff. They're just very quiet and they just do their thing. They're not yappers, right? And these people are highly disciplined in their actual life, in their personal life, in their work life, as well as in trading, right? That's why they're called the 10%, the elite. I'm not saying that these are the richest people in the world. I'm not saying that. But what the 10% means that these are consistently profitable traders. That means every year they show a profit. Every month they show a profit, right? They show some type of profit. If it's not every month, on an annual basis, they're always green, enough where they can make a difference in their lives. I'm not talking about, you make 100,000, then you lose 98,000 at the end, you have 2,000 left in 2025, and you're like, yes, made 2,000. Yeah, you have some work to do, all right? Yeah, you may be break even. You're a break even trader, but the 10% are actually successful. They're actually doing well. They're actually making money where they can make a difference in their lives, right? And these people, they're very unique. They wait patiently for the perfect setup. They don't ever, they don't just throw their money out there just for trading. Let's say you have a day of no trading, like Friday was a day of no trading. Probably shouldn't have traded at all. But the 10% would not have traded. There's no setup. Everyone's just watching. The 10% can sit there for 8 hours, look at the market, and not take a single trade. It's very frustrating to watch, but these people are highly disciplined. If they don't see their setup, and if they don't see what they call an A plus setup, an A plus setup means You have 5 rules, 6 rules, and every single rule is hitting a checkbox. Every single one of them hits a checkbox, and then they go in. Then they go in that trade, right? They test it with a small position to make sure it works. And once it confirms, they push the envelope. They go in hard, right? They go in with their max position, right? I'm not saying all in. I'm just saying sometimes traders have these position sizes that they do. Let's say, well, this position requires a $10,000. If I have an A plus position, it's a $10,000 investment. And if I don't feel it's an A plus, if I'm a little shaky, then I only go in 5,000. And then if it doesn't work out, I'll get out. But these people that only wait for the A plus setups are all my rules being checked off, are all the boxes being checked off? That's when I get in. Now we're just going to talk about going long. We're not talking about going short, but the 10% they buy high and they sell higher. Now, here's the mentality, excuse me. When we go to the grocery store and we see, I don't know, cereal or toilet paper, there you go, toilet paper. You see toilet paper on sale. You go to Costco, you got the huge pack, let's say it's like 20 bucks or 20, I don't know how much it is, 20, $22, and suddenly it's on sale for $10, $8. What do? You load up on toilet paper. You buy two, three, like this egg thing that's going on right now. People are buying eggs this high, knowing very well that they won't get through those eggs, probably going to spoil them in 2 weeks, right? Um, but they buy in bulk because as human beings, we're taught to say that buy things cheaper. Buy cheaper because it's better for you. But these are practical things, right? These are things that you can actually use, and eventually they run out, and then you move forward. The market's not the same, right? The market, if a stock is going down, if a stock is consistently making lows, hang on, let me get my annotation tools out real fast. Now, if a stock is, moving down like this, right? You got a lower high, moves down, lower high, lower high, lower high. There's a problem with the stock, right? Why aren't institutions buying out here? Why aren't institutions buying at these dips and then making it go higher like this? There's a problem if the stock is moving lower. And let's say position trading, we're talking about long term, right? And let's say it's above the 200 moving average. Let's say the 200 moving average is right here, and the price keeps moving lower like this. There's a reason why the stock is dropping. I understand if, let's say you're a 10-year position holder, but we're not talking about that. We're just talking about, let's say you trade exit within a few months, within a few weeks, or you're a day trader, or you're a swing trader, or you're a short term, let's say 6 to 9 months position trader. There's a reason why the stock is dropping, right? Don't just tell yourself, well, I'm just going to keep adding at these lows, keep adding at these lows, and then at the end, eventually, this has to come back up, right? It has to come back up. But you're doing two things. First, you're tying up a lot of capital. You're tying up a lot of your money in these losing trades, and you keep adding to them. Yes, eventually, maybe one day it may come back up. I don't know. You know what I mean? I thought the same thing about Peloton because Peloton was a hot thing during COVID. Everyone was on Peloton, right? Everyone was on Zoom. If you bought Zoom at like $290, it's not there anymore. If you bought, like me, bought Peloton at $27, you're like, there's no way this thing can lose. Amazing bike, right? It's amazing. So I just kept on buying the dip. But it was below the moving averages. It was below the 200 moving average on the daily chart and the weekly chart. It just kept on dropping, and it's never reached that price. It sold that long time ago, but lost a lot of money. I was down like 60% on my overall position. But what I'm saying is that these people, they buy high and they sell higher. They sell higher. That's what they do. They get winning stocks that are moving up, right? And moving up, right? So they may buy, well, you got higher highs, right? You got higher lows. You got higher lows right here. So they may take a position here or up here, and they'll sell it up here, right? And immediately, as soon as they buy it, their trade is working in their favor, right? So they're not losing their money, right? And now they can even add to this position, and eventually that position becomes a very large position, right? Full of P&L, positive P&L. So they buy high and they sell higher. We have to get out of that mentality of, oh, it's cheap. Oh, $5 off Tesla. I'm going to buy. It's very cheap, very cheap. I'm Indian. I'm Desi. I know. And it's just like we love things that are cheap. We love it when things go on discount. You know what I mean? Took me a long time to get out of that mentality of, okay, buy low, sell high. Everybody says buy low, sell high. If it was that easy, everyone would be rich. But the 10% adhere to this simple thing, buy high, sell higher. Just remember that. The 10% can handle a loss very well. For them, it's just the cost of doing business, just the cost of doing business. If you run a business and you have somebody that does a chargeback, that's just the way it is. They weren't satisfied. Not everyone's going to be satisfied with the business. There's several times you've returned a product back to Amazon or back to the store, you know, that's a loss for them, right? Now they have to go through the whole inventory thing. That's a loss, but it's not like suddenly Amazon's like, no, please don't return it. Why? You're digging into my profits. Please don't. No, you have to be okay with handling a loss. And these people are okay with it because that money, as soon as they enter a trade, they already tell themselves, this money is gone. I have no emotional attachment with this money anymore. Either my trade goes to the top and I get out way up there at my profit targets, or it's my stop loss. There's nothing in between. It's either at your profit targets that are like 5 to 1 or 3 to 1. They have much higher expectations of their. So if they're taking a trade and they have a stop loss down here, their take profit will be somewhere up here, right? They only go for A plus setups, and those A plus setups, as soon as that trade goes, it just goes. They get in right here. It may dip down, and it'll go straight up, you know, all the way to their profit target. They don't take profits here. They don't take profits here. In fact, what they'll do is they'll add over here. Dips down, they'll add here. They'll add here because now they have a winning position, and then they start moving their stop loss up here. They'll move their stop loss, move their stop loss, to continue moving their stop loss, and they'll take profits way up here, right? But as soon as their trade hits this, they're out. They have no patience, zero patience for losing trades because they're like, well, I got in here. That's my fault. The market showed me and humbled me that this was not the right place to get in. In fact, the right place to get in was somewhere down here. But I'm not going to wait for that. They don't hold on to losing trades. Remember, yeah, even the market can come back and then do this. They don't hold on to that. Once they've set their stop loss for a reason, because they're technical levels right here, that they have a support and resistance. Once they hit their stop loss, they're out. They're gone. They have no ego. It's okay for me to be wrong. The 90%, they're scared of being wrong, so they hold on to it. So that's the mentality. We have to switch out of that mentality, right? It's very hard to do. It takes time. For me, it took a therapist, but I had to do anything and everything to do that. I had to get therapy. Yes, I am sharing my screen. Hopefully, everyone can see it. Um, um, so yeah, the winners, that's one of the most important points right here. They add to the winners. The 10% add to the winners. Just remember this, please, please. If you remember anything else, remember this. Add to your winners. Don't just be profit takers. You know what I mean? Yeah, initially you may lose a little bit. You may say, well, what if my position size gets larger and larger? Where your stop loss, once you're green, once you're positive, your stop loss should go to break even, right? You shouldn't lose money because now you've already positive, but you keep adding to your winners. Yeah, well, my stop loss keeps going up. Yeah, the stock is going up, right? You have to follow the trend. That's the way it is. You have to go with the market. Doesn't matter. That's why I don't come in with a bias. Don't come in, well, oh, the SPY is down, this is down. The other day, I think CELH, what's that? Celsius Energy Drinks had earnings. Even though the market's dropping, they had earnings. They did well. The stock rocketed from like $20 to like $36, right? Right? Do not have a bias when you enter. Always get in and see what the price action shows you, correct? All right. Yeah, so they have zero patience for losers, right? They don't wait. As soon as it hits their stop loss, they're out. 100%, they're out. They don't need to wait. They don't say, you know what, maybe it may work. They don't hope. They have no hope at all. They don't hope for anything. They just know that, well, I have two rules. Either it hits my stop loss and I get out, or either it hits my profit target and I get out. Either way, I'm getting out. It just depends, right? And the winners are much larger than their losers. The losers are much, if they lose $100, that means they're risking probably $500, right? I mean, let's say they're risking $100. Their aim is to open and get at least $500 out of that trade. So it's a 1 to 5, 1 to 3 trades. And none of these guys do 1 to 2 trades. The reason why I show you 1 to 2 trades because it's more practical. And once you start to get the risk versus reward of 1 to 2, then you move up. You have to have higher expectations for yourself, right? And like I said, they focus on price action without any emotion. They have no emotion. They look at the market, be like, oh, the market's short today. I'm just going to sit on my hands. I'm not going to do anything. Or some people take it short. Unless the price action shows you what's happening, they don't do it. So that's a very important aspect of the 10%. There's just a few qualities of the 10%. They're also very disciplined. They go to sleep. They don't stay up too long at night, especially in the Pacific Standard Time. You have to wake up early. You have to be in front of the trading screen at least by 5:30, 6 o'clock, so you can do some pre-market analysis before it comes. They're very prepared. They're disciplined. So, and all this, if you're not like this in your real life, in your actual life, in your personal life, it's going to be tough for you to trade unless you really, really change yourself, unless you change your actual human behavior, change your mentality of buying low and selling high, changing your mentality of holding on to losers, changing your mentality of being right. You're not here to you're not here to be right. Yes, if you're right, you'll make money, but if you just want to be right, regardless of which way the trade is going, you're going to lose all your money. Your account will blow up. Trust me, take it from a guy who has experience in blowing up his account. So now, two of the most common emotions are fear and greed. Fear and greed. A trader's success and failure is controlled by two emotions, fear and greed. This is Robert Kiyosaki. He's a financial expert or educator. Um, and fear and greed is huge. And this is human. Not to have fear and not to have greed is like saying not to breathe. We all have it in us, but it's our ability to control this and channel it in the right direction that makes us either the 90% or the 10%. You decide what you want to be. Now, what's fear? Fear, I'm not going to really dig too much deep into it because you guys understand what this is. It's anxiety due to unknown factors. Like, let's say you're walking in the dark. Why are most kids scared of the dark? I mean, there's some adults that are scared of the dark too, but why are most people scared of walking into a room that's completely dark? Why? Because of the unknown. They don't know what's there. They can't see what's there. So if you can't see, you can't understand that there's an object in front of me, or I, I just I want to be able to see. So it's the fear of not being able to know the answers to your questions, which your mind is saying, hey, what's out there? You sure you want to go in there? Right? So there's fear, right? There's anxiety figuring out because you don't know what's happening next, right? That's fear, right? The need to be right and the fear of being wrong. Yeah, you have to completely X that out of your life. You don't have to be right. You just have to follow your rules. And for example, like my trading strategy works maybe 50% of the time, 45 to 50%. And you're saying, well, that sucks. So you only have a trading strategy that works only 50% of the time. But my goal is to get a 3-to-1 or 4-to-1 trade. So when I lose 50% of the time, and I do, if I take 10 trades, five of them are losers. But I want to make sure those losers are very small. That means my stop loss is one risk, my reward is five, right? Or three, whatever it is. So when I do win the 50% of the time, I'm getting triple the money. When I lose, I'm only losing 1x, 3x versus 1x, or 2x versus 1x, whatever it is. It can be 1-to-1, 50-50%, 1-to-1. I think I showed you guys a chart last week. But if your 50% is your winning rate, if you're a 1-to-1 trader, you're break even, or in fact, you'll actually lose. Um, Also, fear creates doubt and hesitation, right? Because you have unanswered questions about your strategy. And sometimes fear comes in because we're not prepared, right? We're not prepared. So we have no anxiety. We're not. So I think Kobe Bryant had a quote a long time ago, and some reporter was asking him on the finals, like, "Are you nervous? This is your first. This is one of your maybe final seasons. Are you nervous about this?" He's like, "What do I have to be nervous about? I'm prepared for everything. I'm not nervous at all. They should be nervous for playing me. I'm prepared. I've prepared 100%. There's nothing for me to be nervous." Yeah, a little bit cocky, but that's the mentality you have to have, right? You have to be 100% prepared. It means your pre-market analysis is done. You know which stocks are moving. You see the pre-market movers. You know which setups to take. You have your rules listed in your office. You know that your stop loss is this much. You're not taking 1,000 shares. You know what your risk is, right? So once you answer all these questions, fear goes away. Yes, you may be nervous. That's okay. Nervousness, that's fine, right? And sometimes what you do, people who are very fearful, is they take very small positions on amazing setups that could yield you thousands of dollars. They're like, no, I'm just scared. I don't want to lose the money. You have to get out of that mentality. Yes, if it's an A+ setup, means if everything is working out perfectly the way you planned it out, I would push the envelope a little bit. Go to your max position. I'm not saying all the chips in, but go to your max position, whatever that is. And you have to figure that out. You have to figure out what's my max position. If I have a $10,000 account or a $5,000 account, how much do I want to risk on this trade, right? Do I want to risk 20%? Do I want to risk $1,000 on this trade? Is that my max position? You have to figure that out for yourself. It depends on what your account size is, right? And when you have fear of losing what you've already gained. So you take your profits very quickly. So you just go in there like, oh my God, I'm green 4%. I'm green, $150. I'm just going to get out half my position right here, and I'm safe now. Oh, I feel good. Now I can just relax. But you're never gonna get that big trade. You're never gonna get a lot of profits because you're taking them way off the ground way too quickly. And if that stock keeps running like 10 to 15% up, then you just missed out on that. You just got a very small chunk. You don't want to do that because they don't come very often. So when they do come, these runners, you wanna push it. You want to add to your position, right? And sometimes you overthink, you second guess yourself, you have negative thoughts. This is all your psyche, right? You have to work this out. And the only way to work it out is to go through trading, is to lose and figure out why you're losing. Like, what were your emotions? Like, when I write my journal entries at night, the first thing I write down is, how was I this morning? Did I wake up on time? Did I get enough sleep? Um, how was my emotions? Was I feeling exhausted and tired, or, did I have an argument with, some family members who just took me out of the game and that's why I lost? I write my emotions down, just one or two words. You know what I mean? A little bit exhausted, a little bit tired, stressed out from work, but other than that, I'm good. So then I can see how I did in my trading, right? So it's very important to journal, 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 journal. There's journaling software out there, TraderSync, TradeZilla. There's a bunch of stuff that you pay annually for, but it'll tell you how you're doing. And negative thoughts. My wife was reading this one book about affirmations, and she told me that every morning I want you to say it out loudly. Say a few affirmations out loudly. Say, I'm going to follow my rules. I'm going to do well. I'm going to be disciplined. I'm going to take the loss well, right? It's positive affirmations will definitely help you. So I started doing that, something new I added to my morning routine. Greed. Oh, my favorite one. Greed is, and I know we're all taught not to be greedy. Don't be greedy, share, stop hogging all up, stop taking all the food. Greed, it's just in us, right? And there's a very fine line between greed and ambition, right? You can't say Michael Jordan, guy was greedy, ball hog, right? Took all the shots. No, I mean, you have to understand where ambition meets greed, right? Or where greed meets ambition, right? Now, for me, greed is over ambition, right? It's taking every single shot. It's taking every single trade. It's wanting it all, right? Over ambition, when ambition reaches a point where decision making becomes compromise, that's greed, right? I don't need to explain that to you guys, so I'll let you guys feel that out. It's overconfidence. This feeling of invincibility. Let's say you have a winning week, 5, 10 winning trades, and you're like, yeah, I'm amazing. I can do this. Nothing can stop me, right? I'm increasing my size, I'm tripling my size on Monday because I'm doing well. Obviously, I just have to follow these rules. I'm just going to push my size, right? That's greed, and greed will kill you in this game much quicker than anything else, right? You ignore risk and you're very profit focused. I mean, most people will always say, like I said, how much will I make? How much will I make? How much will I make? My only question every single time I get into a trade is, how much am I risking? I'm always trying to calculate my risks. Okay, how much am I risking? Is this a good stop loss or is this a good stop loss? Should I get out here? Is this too tight? Or should I make it a little bit more looser? Should I make it a wider stop loss and take less shares? You know what? I think I might do that because I think it's going to dip down here. It's always about how much are you going to lose? That's the mentality. The people, the 90% are always thinking, how much am I going to win in this trade? How much shares should I buy so I can go up, right? Um, and then greed also kicks in after a few break even or losing trades. Now you become, God, man, I lost 2, 3 trades. I can't believe I'm down 700. I have to make it back. So you start doing something called revenge trading. And when you start doing revenge trading, it's really a downward spiral. I've done this several times, and I've went from like a $500 loss to a $3,000 loss. Yeah, it's that bad. And then when you realize at the end you're sitting home and the market's closing, you're like, I can't believe I just gave away $3,000. That's rent. That's rent. I just gave away rent in one day because I just wanted to make my money back. I didn't just accept the loss and walk away. And you're going to go through this. Now, it's not if you're going to go through this, you are going through this. And when you go through this, please start internalizing that feeling, that disgust, right? I don't know. Sometimes, we realize that what's the biggest changer in life is what motivates people to change is disgust, honestly. If you're disgusted with the way you trade, you change. If you're disgusted with the husband or wife that you're being, you finally change because hey, they've had enough of this. If you're disgusted by yourself, you finally change. That's the biggest motivator for change if you just think about it. But to get to that level of disgust, you have to go through a lot, right? For example, I mean, man, if you take the example of alcoholics and stuff like that, the reason why they're like in these anonymous groups and stuff like that, and why they change sometimes is because they're just disgusted by themselves, right? So yeah, so it's going to happen. It's not that if it's going to happen, it's when it's going to happen. Excuse me 1 second. Why isn't the slide changing? All right, sorry about that. All right, greed. Is this all we got? All right. Okay. Um, Before we go on to indicators, I just want to, I'm going to ask if you guys have any questions. There's just a few of us. You guys can just raise your hand, unmute yourself, and ask the questions. If not, we can just go on to the indicator portion of the webinar. Any questions at all regarding the psychology part of it? There's actually a very interesting quote that somebody said that they said it's called the CEO and the addict. They say that the probability of a CEO maintaining his path and being successful is much higher than an addict turning himself around and coming back on the right path, because an addict is going this way and a CEO is going that way. Obviously, he's not a CEO if he sucks, and you're not an addict if you haven't been abusing something, right? And I'm not trying to be insensitive, but obviously you can change your life around, no problem. But the probability of somebody in the right path is going to continue going up, and the probability of somebody in the wrong path is going to continue going down. So what I'm saying is that, you know, when you're in a winning trade, add to your winning trades. If you're a losing trade, get out quickly. Don't keep going down because, and don't go down that path is what I'm trying to say. So any questions at all on the psychology?
I don't know.
My brother Noman, you unmuted. Did you have a question?
No, I don't have anything. Thank you.
Okay. All right. No worries. No worries. Okay.
I have one quick question, if you don't mind.
Yeah, yeah, sure.
Um, when we're first starting, do you have any sort of recommendation as to whether we should do day trading first, swing trading first, or it's just, I mean, it can be based on preference, I guess, but if we're just barely starting out, what would be your recommendation?
Um, Honestly, I would try all of it. I mean, little by little. I started off as a day trader, and then I went to swing trading. Then I went to position trading. Because sometimes we feel like if day trading is not working out for us, maybe we're a better swing trader. But swing trading is not working out for me, so maybe I'm a better position trader, and maybe I should become a scalper. It's not that. It's us inherently. If we're not good swing and day traders, most likely we're not going to be good in any of that because we lack discipline, right? Um, I don't know the answer to that, honestly. I think you should try out everything. You know what I mean? You should try out day trading. You should try out swing trading. You should try out position trading and see it just depends on your life. If you have a very busy life, then day trading, sitting in front of a computer for 2 hours in the morning is not possible, especially if you have work and stuff. You have full-time jobs that you have to get to at a certain time. And some people that are very busy, they just swing trade. Swing trade means you just look at the market at the end of the day for a little bit and then decide if you want to enter the trade the next morning. You don't have to look at 1 minute charts, 5 minute charts. You look at, hourly and above, hourly, 4 hour, daily, weekly charts, monthly charts. So, it's more of a macro view and you don't have to scrutinize every single candle, whereas day trading, you have to watch it like a hawk. So, but I mean, I think you should try out everything. As a new trader, you're not going to know what you're good at or what your forte is unless you try everything out. So that's my advice.
Thank you.
The question, I'm very new to investing. Where should I invest? Um, that's a tough question to answer because there's a lot of things to invest. It just depends on your goal. If you're looking for retirement at 59 and a half or 60, then you invest in some indices and stuff like that. If you're very risk averse, then you go with indexes or ETFs, or if you want to do shares, you can do shares. That's a tough question to ask, but I do know that if you should invest and try investing in what you feel is best. You have to do research, due diligence. You have to learn technical analysis, or you do fundamental analysis. So I don't use Robinhood. Your other question is, do you use Robinhood? I don't use Robinhood at all. I use Thinkorswim. I'm in Vanguard. So those are the long-term and short-term stuff that I use. So I hope that answers your question. All right. Let's go to indicators real fast. I know I did say this is a longer webinar, so. All right. So with indicators, I don't use very many indicators, to be honest with you. I just don't. The only indicators that I really use are volume down here and moving averages. Pretty much that's it. I don't use many. So I don't, yes, when I initially first started off, I would use a lot of indicators. I would use RSI, MACD, Bollinger Bands and stuff. So I can go over a few if you want, but what 8 years of experience has taught me that it's all about price action. Every single indicator is lagging. It's a lagging indicator. So let's put on MACD over here and see. I'll give you an example. A lot of people use RSI. A lot of people use MACD. So we can find it. I'll turn on MACD right here. Now, what is MACD? MACD is this indicator right here, right? It's an oscillator. It's called moving average convergence divergence, right? It's a moving average oscillator. So what a moving average oscillator is that it basically goes up and down with the price swings, right? If it's below this they call this a zero line right here, right? So this is the zero line. So when you have a zero line, if anything is below that, then you see it as bearish, right? If the price, let's say in this area right here, this is a bearish area, you wouldn't go long, is what they say. So if you look up from right here and you see that between this, sorry, things are coming very badly. Hang on one second. All right. So they say that if this is bearish, if price is above, then that's when you want to go long. So when you have these types of bars, when you have the green bars or the blue bars above, and you have this moving average, this green line that crosses the zero line and gets in like right here, then that is where you want to kind of go long. So right in this area, you want to go long, and then it's above the moving average as well. And then you stay above it until it crosses below. So you stay above this until all the way until it crosses below. So if it crosses below right here, that's where you get out. So you have this whole move. So you'd make, you go from like 180
We
all
can
the way to like 230.
we can see your screen in case you're sharing.
Can anybody else not see my screen?
Yeah, I can see it. I think if you're using phone, you can now. So I can make sure that on the computer, though.
Yeah.
Yeah, I'm on a computer and I can see.
Okay.
Yeah, I think it may just be a phone, but I am recording this, so and I'll put it up. I'll put up a link, so you guys are more than welcome to watch it if you have, if you want. So, yeah. So the MACD, the moving average convergence divergence, is an oscillator. It oscillates. It goes up and down, depending on price action. So currently we're on the daily chart here, right? So if I go to the weekly chart, it's a completely different chart, right? So. I know you have less of these oscillations, right? And you don't have the wild swings that go back and forth. So I'm on Amazon right now. So if you wanted to make a purchase just off of the oscillator, which I don't recommend, you want to have something called confluence, right? Confluence means that you have multiple indicators, not indicators, but multiple different things giving you the right direction. Like, oh, wait, the price action is above the 200 moving average. Okay, that's a check to go long, right? We have higher highs and higher lows, right? Okay, that's a check to go long. But if you just base it off of this and say, okay, you know what? I'm just going to go long here. If price collapses here, then it crashes. You don't want to just use indicator just to go long. And sometimes it may look, in hindsight, of course, everything looks beautiful. But when you're actually going through the trade, and let's say it tells you, well, buy as soon as this moving average crosses this, right? And you get in right here. And if you look up, yeah, that's right around this area, but it's below the 200-day moving average. And usually that's a bearish sign. As most traders will not go long below the 200-day moving average in any type of thing, in any type of trade. When day trading, we don't really use the 200-day moving average. We use it mostly in like daily charts, weekly charts, and above, sometimes a 4-hour chart. So they would say go long right here. So let's say this is the trade. If you're using MACD, and you're going to go long right here in this area because it crosses. So you take your position there. And that brings us to this area right here. So we're getting in right here. And the trade basically says that if the moving average goes below it, if this moving averages go below it, below the zero line right here, that's when you exit, right? This is your exit right here. So far it has not. So, you're still in the trade. Maybe you can add to your trades right here. Finally, it's above the moving average here. Maybe you do an add here, it dips down, still the moving average. I mean, the MACD still hasn't gone below, so you stay above it, and then it keeps going up, right? So that's one indicator that you can use as a MACD indicator. It's on every single platform, TradingView, Thinkorswim. I don't know about Robinhood, but I don't use Robinhood, but I know it's on the more popular, larger platforms and stuff if you're doing technical analysis. And you can add to these positions. So that's MACD. It's very basic, but it's also a delayed indicator, right? I mean, it'll always come at the end of the day after the price action has completely closed. It's not just going to come randomly before it happens and say, "Hey, I think you should take the trade." These are all delayed indicators. You have to understand that they come once the price move is done. So if you're day trading, let's say you use a 5-minute chart, right? Let's go right here. Immediately, yeah, you can kind of use it with other confluences. You can say, okay, Amazon suddenly start dropping. I only get in when this MACD crosses above, So even if you get in right here, this can just be a pullback because you still haven't made a newer high. You're still going lower and lower highs. So I don't know how helpful it is. It didn't really help me. Maybe I just wasn't as good as reading it. Maybe you'll have better luck with it. But that's the MACD. The next one that people like is the RSI. So put the RSI. Do I have RSI here? I don't. Okay. RSI. Here's RSI. Why? All right. The RSI is a relative strength index. That's what they call it. That's the full form for it. Relative strength index. It basically tells you the strength of the market or of the stock that's going. And people like to view the RSI as overbought and oversold. So you usually have a 50% line, right? They have a line like this, that's 50%. That's the center line, just like the zero line in MACD, right? So say if price action is above the 50% line, usually you want to get in right around the 50% line, right? It's kind of like you want to get in on this bounce right here. And let's say that's probably like right there in this area, right? And then you write it up, right? And they said once it gets above the 70% mark right here, we'll say, use a different color for that. Then once it gets above this 70% mark, it's time to sell. So you would sell right around there, right? And they say once it gets in this area, it's time to buy because it's very cheap way down here. This is the 30 line right here. So I say the 30 line is oversold, right? So there's the oversold line right way down here. So if anything is down here, for example, there's a line right here, you buy below 30 and you sell above 70 or right around 70. So if you follow just this, then this is what the trade may look like. You're buying at this huge dip right here. This was, I think, last August or something. I remember this. The last dip that happened, and then you don't sell until, let's say, you get above 70 in this area. So yeah, you could see that it could definitely work out, right? Right? You took a trade that's way down over here, and then you got out way over here. So that's getting in, let's say you're getting a 150 for Amazon and you're getting out around 209. That's a beautiful chunk of change right there. But if this is the only thing you're using, sometimes on these dips and stuff like that, you see this dip below the 50% line and it shakes you out. So I'm not saying whether you should use the RSI or not. I'm not going to say what the negatives are. I'm just going to tell you what the RSI does, and then you can decide whether you want to use it. And I've used all the indicators in my first 2 years of trading, MACD, RSI, these more custom indicators on TradingView that they have, algo trading. I've used Ichimoku clouds. I know what's a Ichimoku cloud? I don't know what it is, but it doesn't really work for me. I've used Bollinger Bands. I can show you Bollinger Bands, but this is RSI. And basically, they say that this is overbought and you should sell right here, and this is oversold, and you should buy somewhere around the 50% line. Or if you're position trading, long-term trading, let's say you're on the weekly chart, and you want to get into positions for long-term, this is a monthly chart. Okay, let's go to weekly. There's a weekly chart. You want to get into long-term swing positions, because look, if you look at the RSI here, right, it's pretty low, right? if you look at the RSI, I mean, there are discrepancies. Obviously, there's going to be discrepancy because these are lagging indicators. Here it shows that the RSI is well below. It's completely oversold, right? And that matches with this area right here, right? So this area is completely oversold. So you buy here, right? You buy directly here. It goes a little bit high, right? But you want it to go all the way up to here. So what happens? Look at this drop down right here. This drops down below this low, correct? It's a new low right here, right? New low. But look at the RSI. It has not gone back to this oversold area. So for you, you say, I'm just going to still stay in, but look at this. You're at a loss right here. And then you panic and then you sell. And as soon as you sell, what happens? It takes off. That's usually what happens in trading. As soon as you sell, it looks like the market's out to get you. So what I'm saying is that these indicators are not perfect. Use them with confluence with other indicators, with your moving averages, with your price action, with your knowledge of technical analysis, right? Use it sparingly. That's all I have to say, because it's a double-edged sword on this, right? I know some people that texted me saying go over Bollinger Bands. Okay. Let's go over Bollinger Bands. With Thinkorswim, you can have as many indicators as possible, so you don't need only one. Let's see, Bollinger Bands. Did I add them? All right, there it goes. Apply. Okay. These are Bollinger Bands. I'm still on the daily chart. Let me expand this. Basically, what Bollinger Bands say is that you have a bottom line, right? You have this top line. You have a middle line, which is this green line right here. Let me turn off the moving averages because it could get a little bit confusing. Turn this one off, this one off, this one off. All right, there we go. Looks a little bit cleaner. So these are called Bollinger Bands. Sometimes they're shaded, they're shaded in here. So with Bollinger Bands, people say that, or the way you're supposed to use it is you buy when the Bollinger Bands hits the bottom band, right? As you can tell, that price action kind of respects these bottom areas, right? So right here, kind of respects it, respects the top, respects this top, respects this top. It goes a little bit below, but eventually comes back inside, right? So they say, as long as you're buying at these low bands and selling at the high bands, you're making a profit. You buy here, sell here, And sometimes the bands contract, they get really, really tight, like these areas right here, where the width of the bands get really narrow. They're like, that's the best area to buy, because when it does that, that means it's getting ready for like a really big measured move. It's getting really tight, like this little triangle right here, and then it takes off, right? And you have this huge move up, right? So Bollinger Bands, the way they work is you sell up here on these bands and you buy at the bottom. I mean, they're pretty simple, but let's say you buy here and you say, oh, wow, it's well out of it. That means it's really going to go back up here, and you're waiting for it to get there. It never gets there and it crashes. That's when your stop loss needs to come in. With anything, I say try it. Try anything and everything, because that's the only way you get knowledge. That's the only way you figure out what's going on, what works for you. Bollinger Bands may work for you. Maybe you figured out the way to use them. That's great. But you want to have a stop loss. You have to have a stop loss. Risk management is key. Doesn't matter what your trading plan is. So let's say you do enter here. You say, okay, you know what? This price is dipping. As soon as it gets back inside the Bollinger Band right here, I'm going to get in. So I got in right here. And my stop loss, let's say, is, a few ticks below this. We'll put it right here, right? And you get in right there, right here. And you take it long and you say, you know what? I'm going to take profits when it hits this top Bollinger Band. Well, it never hits it. It comes back down and it stops you out right here. You prevented a much bigger loss from way down here, right? So you prevented a much bigger loss. So you want to have stop loss, risk management everywhere, no matter what. You want to have risk management, regardless of what indicator you're using, which moving average you're using. You have to have risk management, right? So that's important. So these are Bollinger Bands, right? Buy at the bottom, sell at the top. That's how Bollinger Band works. So I'll take some ideas from you guys. Like what are some indicators that you guys want to know about? Because this is the extent to what I use indicators in MACD, RSI. Well, I mean, I can check to see what other popular indicators there are, but this is all I've used. I'm more of a price action trader now. They have something called ATR, which is average true range. It talks about the true range of a stock, how much it moves in a day. Sometimes people take trades off of that. Let's see. Yeah, I don't. So I'd like to hear from you guys. Please tell me, well, what do you guys want to see? There's a different type of MACD. Sometimes they have this histogram crossovers and stuff, but um, I'm just a price action trader. That's it. I just watch price action, and I feel like that's what's helped me, survive the market. Been in the market for 8 years now. So standard deviation channels. Yeah, I mean, they have hundreds. You can even program your own, right? VWAP, I do use VWAP, right? VWAP is not really an indicator; it's a moving average for me. So I use that for day trading. Um, I do use volume and I use average volume as well. Volume is one of the main indicators. Volume is super important. I feel like I can talk about a little bit about volume. Volume, there's a book called Volume Price Analysis. I would strongly recommend you. Speed lines, I've never heard of speed lines before. Sorry, just answering question. Um, I've never heard speed lines. I'm not sure. I'm not sure what that is. But if you look at volume right here, um, volume is huge because volume will indicate whether a stock is in a pullback or if it's moving forward, if it's moving up, with what type of volume, right? For example, if you see this down move right here, you see that the volume here, that these two bars, huge volume right here. And you see the way that price dropped, right? It completely destroyed the lows, right? So I feel like volume is something that you should verify. And volume is something that is happening currently. It's happening right now. The volume is moving up in ticks. It's the amount of shares traded, right? The amount of shares traded of a certain security or commodity. And you can't hide volume. Yeah, sometimes there's dark pool volume, which is, let's say you're Oprah Winfrey and you want to buy 10 million shares, right? Yeah, that may not show up here right away, so it doesn't affect the price of the stock. But if you're a retail traders, which is who you're competing against, all their volume is right here. It shows up in these bars. So if you see a big volume bar, like if you see this first bar right here, um, let me switch. So if you see this first bar, let's zoom in. Sorry about that. I'm going to zoom into this right here. So if you see this first bar right here, and you see the volume is increasing right here, you got low volume. You may think it's just, hey, you know what? I think it's just, let me draw a little line right here. You say, okay, you know what? This is just a pullback. It's just going to bounce here, bounce here, bounce on the third time and take off, right? But then you see the volume is low. As long as the volume is low, and you have larger green volume like this, like you have moves like this, and then you have large volume, right? You have moves like this, and you have large volume. This is a good indicator that these small red volumes that are happening, like this little area in the middle, that's pulling back is just a pullback, right? Look at the volume, very low, right? That's just a pullback. Does the move up? This is still just a pullback right here, right? Up to about this guy right here, just a pullback, right? It's just a pullback because you have large green volume, low red volume, or low pullback volume. Large green volume, low pullback volume. So we're still in an uptrend. But when you get something like this, and we're breaking the lows, don't stay in to find out what happens next. Get out as quickly as possible. This usually means there's a shift. There's heavy volume coming in of sellers, right? So when you have heavy volume of sellers, we're going to break the lows. The lows that get broken right here, right? You have a new low, right? Now you have a lower low, and you have a lower high, right? Lower high right here. So that means we're dropping. And this is the weekly chart. If you go this to daily chart, I think it's a good idea. Let's go to the daily chart. We can really see what's happening. What is this? April. All right. So where is April? Way back here. All right, we'll take this example right here in this area where price keeps trying to go up. I think April was down here. I think we're looking at this area right here. We had this big dip way down here, and we had this big volume right here. Um, so obviously, when you're in a trade and you're trying to trade it, you don't want to get caught in these big volume days, right? In these big volume days. When you have big volume, you want to stray away from them. There's a lot of selling happening in this volume, especially right here. So you see this bar right here in itself. Let's see. So you see this guy right here. This guy relates to this big volume right here. Now the rest of the time, volume's been kind of low on the red, right? You've had larger green volume right here. But when you have this volume right here, you don't want to wait to find out what happens next, especially if you got in right here. You want to try to get out as quickly as possible because when you have large red volume, usually you want to keep a tight stop loss, right? Let's say your stop loss is here, and let's say your entry was here, and your stop loss is right here, and you see this big red volume. You want to think about reducing your share size because that means it's higher than this green volume. That means we're going to dip a little lower. It's more than a correction, or it's more than a pullback. It's possibly a short correction for a short period of time. So this is the daily chart. You have 1, 2, 3, 4, 5, right? And then you have a short move up. Now look at this. So you have a huge red candle right here, right? Sorry, let me just get my tools in order. All right. I have this huge red candle right here, right? And it's accompanied with the huge red volume, larger than all of this volume put together, right? Is this red volume, correct? So when you have something like that, you want to be out on all your positions, correct? And then you see this move up. This move up is very small, right? A small move up right here, right? And the volume represents it. It's low volume. So when you have low green volume, that means this is the zigzag pattern that we're following. We're going down like this, low green volume, high red volume, low green volume. We're going down, zigzagging down, right? So with that, what happens? We have another low volume day, and then we have this huge drop right here. True. Oh, well, that's a green thing, but look at this gap. It's a green candle, but you have this huge gap down from here all the way down to here. That's huge. If you look at it in price action, that's going from $173 all the way down to, you can see the price right here on this side, $166, right? That's $7 to $8 right there. Swing. You don't want to be in that, right? You don't want to be in that. And sometimes, yes, volume will dip down hard and then make a fury and a comeback. Sometimes you have exhaustion volume. Exhaustion volume basically means that if you're in a downtrend for a long time, finally you have exhaustion volume and a turnaround. So here's a good example of exhaustion volume and a turnaround, right? So you see this area right here where price has been steadily moving lower, right? You have, let me show you the lower highs, right? You have a lower high, you have a high, lower low, lower high, lower low. This is a similar high, but we do have a lower low. The same high rejects here, and suddenly we have this huge gap down right here, right? And you can tell sometimes you have exhaustion volume that happens right here in this candle. You have large exhaustion volume, and sometimes you have a huge gap down. Probably because they had earnings. Amazon had earnings right here and they missed it, but technically, we're already dropping, right? And then they have this huge drop here, and then slowly, slowly it starts picking back up. You have this huge buying candle. So you have buying volume as well, right? Sometimes you have buying exhaustion volume, right? Sometimes you'll have volume where you'll get exhausted on the way up. So eventually you'll have big, strong move. Usually you have a move like this, you want it to continue up. But sometimes it gets exhausted and then it has to go back down because it's been rallying from here, from all the way from here to here, right? It's been rallying, and now it's exhausted. Price gets exhausted, and sometimes you have these massive exhaustion candles, and that means there's a pullback coming in. Sure enough, a small pullback came. You have some consolidation sideways, and then most likely we went back up. So I would definitely study volume price analysis. I think it's by Anna Cooling. I'm not sure. I'll put the book name in the WhatsApp group, but it's a really good book to understand candles and price action, like how it works. Like why do we have these standout candles? We have this huge candle right here that sticks out from all of these candles from this whole chart going back to February of last year. If you see that February of last year, you left this guy right here, right after earnings. A lot of buyers. That means people were ready to buy Amazon. They were waiting for earnings to happen, dropped here the first day, so people just start buying, but there's more selling happening. And then here is where the bounce came. Nice V-shaped recovery back into this zone from 150 all the way to 240, a good move up. So it's a $90 move. But yeah, so let me know if you guys have any questions about indicators, about anything psychology related, or any questions at all. I know I did miss some slides from last webinar. So if you'd like, I can spend some time going over those crossovers. I think we had one slide. That was 1 second. But yeah, if you have any questions, please go ahead and post them or just unmute and speak it. That's fine too. That was indicators.
So Circular Care, thanks for the
No
for
problem.
the training. I mean, that's you're the one I kind of start from the beginning, so kind of learning and kind of try to apply it. So
Sure.
one thing that I kind of run into the issue, probably others who start probably is that, like you mentioned, we can when I try to follow the chart, it kind of seems like always behind. You see the things after it happens. Like, how do you stay not if not ahead, at least while it's happening? Like, how do you? Is it a practice that kind of help you, or how? Like, I always feel like I'm always behind. When after it happens, you see it. Maybe it's the I don't know the practice or not following the pattern, or how do you how can I improve that?
Um, you basically mean predicting price, right? You want to predict price, right?
Not even predict, I guess, it's like the chart you show here, like we see that, but it's usually after action, right? After it happens. So okay, now
Right.
now
Right.
is that happened?
Right.
But is there a way can help improve it and see, okay, this is the pattern that problem is going to be following or something like that? Or I don't know, is
Yeah.
it the
I mean, well, you're never, to be honest with you, you're never going to know what's going to happen next.
exact
You're
yeah,
not going to know, right? The
correct.
market, you just don't know. We're not price readers. We cannot predict the future of the market. But we can do is with technical analysis. That's why I said that this knowledge that you guys have, this is just basic technical analysis knowledge, right? Just basic. You can find this anywhere on the web. You can do anything. This is just basic. I just put it together for you guys. But this is what you can do is you can take this and the technical analysis knowledge doesn't change, especially support and resistance. So that's one of the most important things, right? Because as you can see here, you have the reason why I brought up the Apple chart is because we have supports and resistances that we drew out last time in our support and resistance class and planning a trade out that we know that let's say you're here, you don't know what's happening, right? You don't know what's happening. You're here. We can kind of zoom out and let's see if we can move so we don't know what the next price is going to happen, right? So let's say we're in this area, right? We're on October 21st. You don't know what's happening, but you've already drew out these lines, right? Why did you draw these lines out, right? Let's remove these and figure it out, right? We came here and said, okay, well, price is definitely hitting these areas. It bounced here. So that's why I drew this bottom support out. I think I'm going to draw a resistance as also because I see that price is kind of respecting this area. So we drew out a resistance, right? So now we know that price is in a range. We know for sure that price has hit a few things, right? It has hit this area, right? Hit here, rejected, hit here, bounced, rejected, kind of went right here, right here, and then that's rejecting again. Now you don't know whether price is gonna break out or
Break.
get in, right? So what I always suggest is wait for the breakout, right? Wait
Okay.
for the breakout to happen. So for example, you take a line like this and you said, this is the line. I want to get in if one of these candles closes above this. Like I want a candle that goes like this. Like I
Okay.
want a candle closing like above 240, like it closes, it's all colored in green and it's above this. Then I get in. That's when I get in. I get in right here. This is my entry right around here, right? And I put my stop loss, let's say around 230. So I'm risking about $10 a share. We're talking about swing trades or position trading right here, right?
All right.
Because if it breaks back into this area, it may bounce here and take off again, but this is resistance. Now resistance has become support for this candle. So let's say we take this trade. We say, look, I want to get out right here at 230 if this trade goes against me and I'm going in long. This is all you can do. If
Okay.
this candle prints, only if this candle prints, right? But we have to wait to see if the candle prints, right?
So
So now
that's a
let's,
discipline you mentioned, I guess. You just have to
right,
wait and see that
right. You have to wait.
it's break.
It's about
Yeah.
patience, about waiting. And so you set alerts. Let's say you set an alert right here. You say, look, I'm going to create an alert right here. Say if price is at or above 238, we'll just change this to 238 right here, and you press create. So it creates an alert right here, right? So as soon as price breaks it, it'll go ding or send you a recept, whatever. Or you're watching price action every single day to see if it attends, right? If it breaks. Now, once you're here, let's see what happens. We go sideways and we see, well, it hasn't broken yet. Okay, I'm good. I'm glad I didn't get into that trade. You see this candle pop up right here, red candle, right? So currently it looks like price may be rejecting in this area. Let's see what happens. Let's see what happens, right? We go, okay, we didn't get a lower low yet. Okay, all right, maybe price maybe moving up. Okay, I'm getting ready to take the trade, right? Oh, I don't, oh, no, you see, price made a lower high now. Got a high, you got a lower high. Now price is dropping lower, right? Now you know that most likely price is going to come back down to here, or it may come somewhere in between here because you see these, there's like a minor resistance in this area, right? You see like a minor area where price is kind of bouncing right here. So you're like, okay, well, I expect price to at least come down to there. So let's see how this trade plays out, right? So yes, price is coming right around this area and this area, right? So we'll see what happens with this trade. Now price is starting to move back up, but did it make a higher high? It did not make a higher high. You have a high, you have a lower high. Now it made another lower high because you have candles going downwards, right? Okay, price looks like it's trying to react right now. We may be going up, but you're waiting. You're waiting for this to break, right?
Yep.
Right? So you're like, you know what? Let me extend this resistance because this is new price action right here. So I'm going to put it right. Sorry, 1 second. I'm going to put it right here, right? Right. So but I'm still waiting for my 238 to hit for me to even get an entry because that'll be the breakout. Otherwise, I'm still facing resistance, right? So then you wait. This is all waiting game. That's it. You wait for the right entry. Boom. You got an entry right there, right? What happens? Price hits. This alert will go off at 238. Now, this price is actually closed above this resistance area. And now that's all we know. We can question ourselves, well, what if it's a fake out and comes back? Yeah, it could very well be a fake out. But do you know it's a fake out? You don't know it's a fake out. We can only go with what information we know. Otherwise, we shouldn't be trading at all. We know this is your strategy that if it breaks out, I'm going to get in and I'm going to put a stop loss at a technical level. So this is what I'm going to do. I'm going to go ahead and draw out a stop loss right here. So what I'm going to do is, okay, my entry's right here, 240. I got in at 240. Where's my stop loss? Where did price last kind of bounce back from? Maybe this area, 230, depending on your risk. I would say around 225, right? Right around there. Let's just say 230 right there. So you're risking about $10 a share. We're talking about long-term trading, let's say 6 months, 4 months down the line, or 3 months down the line. Let's just say that's our goal, right? So we get into our trade at 240, stop loss at 230, and now we move forward with the tape. Well, you're happy. Oh, price is moving up. Awesome, awesome. Now you're in the trade. Price continues to move up. Now price comes back. What are you going to do? No, price didn't come back. It kept on going, right? Now price is moving up nicely, very nicely, right? Now you're at 260. Your entry was
240.
Yeah. Your entry was 238, 240, right? Let's just put actual lines here. Your entry was at 240. Let's just say it was at this candle, right?
Yep.
You entered right around here. We'll go ahead and mark that. That's where you entered. So 240. We can say this is our entry, right? So that's our entry at 240. Our stop loss is right around here, around 230. But now you have a winning trade, right? So when it does this pullback, this is a great place to add because especially you have a move up like this. You're like, you know what? I'm going to start adding to my position. So you add to your position. And once you add to your position, your stop loss is not here anymore. Your stop loss is now at break entry. So now you cannot lose on this trade. Yeah, you may get zero money on this trade, but you cannot lose on this trade because now you're adding. Once you start adding to your trade, you continue up, right? This is what winners do. We add to our position. Because how often do you get winners? Not very often, right? I get it 50% of the time only. So the 50% time that I do get winners, I add. Like for example, if I got in right here and it came and retested and it broke, I would add right here again, right here at this new high of these 3 candle break. And then it moves up, drops back down here and breaks again, I add right here again, right? Because you're adding to your winners. You want more out of this trade because it's going with you. It's not going against you, right? So you keep adding to this trade. Now let's see how the trade plays out, right? It's pulling back. It's not hitting your stop loss yet, right? This is your stop loss, right? Stopped. Your stop right there. That's the way it is. I don't know what's going to happen next, but you avoided this whole pitfall. Yeah, you continue to add, but what did you do? You moved your break even, right? Your break even could be here, or your break even could be there, and you get stopped out somewhere around here. Yes, you didn't make that money, but you could have taken profits out here right here at 260 if you wanted to. That's why you have to have a plan, right? You have to say, well, I at least want $10 a share, I want $20 a share, but you got to also give the market time to run. So if you add here, here, then yeah, I would definitely take some profits out here, or I take profits on this first red candle right here because now you got in at 230 and you've got 260, 240 to 260, that's $20 a share. And if you're adding along the way, then yeah, your average may move up, but so will your profits, right? Because instead of 50 shares, you're at 150 shares, you're at 200 shares. So we don't know. To answer your question, I know I went a little bit off topic here, but to answer your question, you want to wait. You don't know what's going to happen next, but you want to take it according to your setup, according to your trading plan. That if this level breaks, then I'll get in, and that's your trading plan. But we don't know what's going to happen next. We just know that it's going to play off of support and resistances. And now if you keep moving, we'll see that it's giving it another try, right? It's trying to break again. That's a false breakout right there. There's a false breakout. And then now the price is here, right? So this is still you still have this here. It did a false breakout. A lot of people will get caught up on this. That's why you want to wait for the candle to close, right? This candle closed green. This candle did not. It just started off up here and then dropped down and it closed down here. So it didn't close above this. So this would not be a trade. This, however, would be a trade, right? You get in that same exact position again, right here, right? You get back in here again, right? And then you take this trade up, and then we don't know where this trade is going to go. But now you have some levels to deal with, right? Now you have a resistance here, you have a resistance here. Before you didn't have a resistance. That's why it's important that if a stock dips and it's moving up and you have price levels from the past, you want to start setting your profit targets, but at the same time you want to add to on the way up. So I hope that answers your question.
Yeah.
Okay.
Do you use the trailing stop loss usually on the once you put it in, or is it because sometimes it triggers kind of too early?
No, I try if I'm doing swing trading, then I manually trigger stops.
Okay.
If I'm doing day trading, depending on how volatile it is, how quickly it's moving, like scalping, then yeah, I'll definitely have like a hard stop in place, like right there. So if it goes back, I mean, sometimes the 1 minute chart moves very fast. I have a question in the chat, but Javid, how do you know which stocks are good candidates to add besides the big names which everyone follows, or market gainers or losers, which is too late to know? You honestly don't know. You have to do some research on it. You have to. It depends on what you're doing. For example, like if you're swing trading and everything like that, you have to set up scanners. Like TradingView doesn't have scanners, but Finviz has scanners that kind of you have to have criteria. Yes, they're the big stocks that you can go after, the FANG stocks, S&P 500 stocks. Obviously, yes, the gainers and losers of the morning, you're not going to really know. Sometimes the gainers will continue moving, right? Sometimes the losers will lose for a little bit and then they'll bounce. Your job is to just trade price action, right? It's to pick a few stocks. It's to create a watch list that you feel is best for you, right? Large cap, mid cap, stuff that you can afford. If you have $1,000 account, I wouldn't suggest taking Amazon or Apple because you're almost at $250 a share. What are you going to take 4 shares? That's fine if you're just trailing. But I would deal with something a lot smaller. You know what I mean? I would deal with like, let's say, I don't know what the stocks are. I mean, that's the research you're going to have to do. You have to really create that watch list that, hey, look, I want to take stocks under $200 or under $100, maybe $50 to $80, or I want to deal with stocks that are $20 to $50. Those will be a little bit more mid float, lower float stocks, but sometimes you can find stocks that are, that have large caps, but they have a low price, right? You have to do that research. That's just something you have to do. And some people will sell you a watch list. They say, hey, look, sign up for my newsletter. Here's my watch list. But there's a really good software, I mean, within Thinkorswim as well, or you can even go to Finviz, and you can set up alerts and then create watch lists. Like, for example, let's go to Finviz real fast. I don't have the pro account, but if you go to screeners, you can come here and you can set up screeners for yourself. You can say, S&P 500, market cap. I want something small, mid, nothing over 2 billion. You can even set like the price action. Like, for example, you can say, I don't want my float to be too high, under 1 million. Average volume, target price, relative volume, price. Oh, there you go. This is what you're looking for. So if you have a limited account, let's say you want under $50, right? And you search for it. And then from here, you can say, hey, look, I only want tech, right? You can say, I only want technology. Okay, technology under $50. That's a mid cap or a large cap. That's that's in the S&P 500 are these guys right here, right? Hewlett Packard or something, HPE, HPQ, Intel Corp, right? These are cheaper. So after this, you want to look at volume. You say, okay, volume, the most volumes, INTC. So then you say, okay, you know what? INTC sounds like a good name. You come in here, type in INTC, and I say, okay, not bad. Now I have a chart to deal with, INTC. Now again, you have to look at the guidelines, whether it's halal or not. You have to look at your own moral compass as well. But then you come here and then you add this to your watch list. Be like, okay, look, I like INTC. I like the way it's moving. Now I'm going to mark out the support and resistances, see how it's moving. It's bouncing off this level, obviously at 18. If I want to swing a long-term trade, I would love to get in at 18 and take it higher. I need it to go above 37, 38, and then I can maybe push to 46. You have to do that. You have to do that research. You have to do that due diligence to try to figure out the watch lists and stuff like that. But use the screeners in Finviz. Finviz is free, obviously, and you can use that anytime. And you can put your criteria in and come up with stocks that you like. So Nawaz bhai, Nvidia before earnings and after earnings. What is your view? Don't really. I mean, my view is that it's rejecting right now. I mean, I don't have a view. I just let the price action do the talking. Honestly, I try not to come up with a viewpoint very, very often, right? Nvidia, I like to look at the weekly chart, try to figure out, it's rejecting these areas several times. One rejection right here, two rejections, three rejections at all-time highs right here. And kind of a double top right there. Now we're making, lower highs. We have a lower high here. We have another lower high. So I mean, right now, my only thing is that, yeah, if it's rejecting here, I think it's going to come down, right? I think it's going to come down to at least this level, 129, maybe back to this level. That's what I'm looking. I'm just looking at what price action is showing me. I don't have an exact thesis on it. I've left that part of me back a long time ago. I stopped coming up with theses because I love a certain stock, because I want the stock to do well, because let's say you own a Tesla, you know what I mean? And you want Tesla to do well. Oh, I own Tesla and I own the shares. I'm doing really well. So obviously, I want Elon Musk to do well. I want all this to work out. So you buy the shares based off that bias. I don't know. Everybody loves NVIDIA. And I know why everybody loves NVIDIA, because of this move, this 1,000% move, right? Whatever it had. I mean, it literally went from $30 to $150, right? And it has stock splits along the way. So, I mean, yeah, if you don't catch this move, it's too late. It's too late. Don't think it's going to make another move like this. You know what I mean? Most stocks, they don't make moves like this every single time. They rest and make another move. Like even Tesla, we remember Tesla back in the days, it was like $1,500, Amazon, $1,100 before the stock splits. They made their moves already, So yeah, they may be moves in the future. They may be not. I'm not sure. And I try not to have a bias because that saves me from losing a lot of money. And I suggest you guys do the same thing. Don't fall in love with the stock. Unless, of course, you're in the stock and you're losing right now, then yes, you have to figure out how to minimize and mitigate your loss. Right now, if you got in like around 150, between 145 and 150 in Nvidia, yeah, you're down quite a bit. And unless you're planning to hold this for 5 to 10 years, then it's a completely different strategy. It's completely different, because then you would buy every dip. You don't care if you're down $1,000. You keep buying the dip. You keep buying the dip because you're like, well, I'm going to hold Apple forever, and give it to my kids. That's different. That's not trading. That's just buying and holding, right? And I'm not talking about that here. I'm talking about regular income trading, which, you want to make a monthly income trading. You want to make a weekly income trading, right? That's what I am focusing on. That's what I'm doing, right? So I don't hold losers for too long. I don't hold swing trades for too long. As soon as it hits my stop loss, I'm out. I'd rather preserve that capital and put it into something else. So yeah, I've had 30% losses, 40% losses, and I've learned from them. Do I make the same mistakes again? Yeah, sometimes I do, but they're not as bad as my first few mistakes. But NVIDIA right now, I just see it lower highs. That's all I know. It's dropping, It's going to come probably down to here, 127, 128. I mean, it's going to reach this. That's what it looks like. It's going towards. That's all I know, that there's support here. So maybe it comes here and bounces like it did 1, 2, 3, 4, 5 times, bouncing and retest the highs again, and then breaks out. And that's all I have to say about that. Once stocks are sold, cash proceeds go to money market account with interest in case of Fidelity, at least. Any alternative to avoid interest? you can actually call in to some of these places and say, I want a non-interest bearing account. Um, uh, so I know that I did that with Charles Schwab. So mine doesn't have an interest bearing account because I have a cash account. I don't have a margin account. I don't utilize margin from the brokers. I just have a straight cash account. So mine takes 1 day to settle. So if I have $10,000, I use up $4,000 today. I will not be able to use that $4,000 again. I only have $6,000 left to trade with. So I just wait for the next day when it settles, and then I'll trade again. That's the best way, honestly. Margin is dangerous, very dangerous. Initially I didn't have a choice but to get in a margin account, but the rules have changed a little bit since I've been trading. So call your broker, Jaweed, and then ask them. We'll see what the alternatives are. Fidelity is different than Charles Schwab, so I'll definitely call them up and try to figure that out. So, yeah, you're welcome. But the most important thing, I'll leave you guys with this, if there's no more questions, is that taking all this information and actually utilizing it and learning on your own, like doing a lot of research on your own, doing a lot of due diligence, reading books. Like I've gone through like at least 30, 35 to 40 Amazon books or Audible books. I'm more of an auditory listener, but I do have some textbooks at home as well that I refer to constantly. Um, it's it's you can have all the technical knowledge in the world, but if you don't master your psyche, if you don't master yourself, if you're not disciplined, and I'll go back to psychology again, because psychology is what inhibited me from becoming successful. I knew everything. Technically, I felt like I'm one of the best technicians out there, and I'm not trying to be arrogant, but that didn't help me. That what I'm trying to say is that it didn't help me. I can find patterns randomly. I can find patterns, right? But that did not help me become a successful trader. It's when I started to understand how the 10% think, that's when I started becoming successful. When I stopped holding my losers for a long time, that helped me stay in the game longer. So if you can buy more time by getting out of your losers quickly, then you can stay in the game a lot longer to see if you're going to be successful. But if you're losing money constantly and you're constantly taking money out of your savings, out of your checking account, out of your paychecks and stuff, and funding your trading account, you're going to have other problems to worry about, financial issues, which you don't want. You don't want to use your rent money to trade. And this is extra. You know what I mean? This is extra. You have the money, yeah, start trading, start learning, but you really have to master your mindset. And then you'll find out after first few losses that, what type of mindset, the feeling that you get. The feeling of a loss is far greater than the feeling of a big win. Like I've had $10,000 winners and stuff like that, but my $1,000 loss is like, back in the days, it was so horrible that it's just like, takes up my whole day, takes up my whole weekend. I just can't get it out of my head until I make that money up and revenge trade. Alhamdulillah, I finally kind of got out of that mentality. I mean, sometimes I do slip back in. We're all human at the end, but we really do have to master it. We do have to master our discipline and psychology. But the book about volume, yeah, I'll post that right now. I think it's volume price analysis by Anna Cooling. Yeah, let's see. Let's see. Here it is. I'll post a link right now. That's the volume price analysis book right there. Pretty good book. Yeah, I would say it's not a beginner's book. I would say it's medium to advanced. So, know your basics first before you start reading into that book. Any questions at all out of any of the webinars that we've had, if you've attended all of them? I will be posting this online once we finish the recording, inshallah. But yeah, if there's no questions at all, then I want to thank everyone for attending this 6 webinars that we've been doing for the past month and a half. I hope you guys have benefited from it. I hope you guys can take this and, help yourselves out, help your family out, change your lives like I have, alhamdulillah. But yeah, guys, thank you for attending.
Jazakumullah khair, and Ramadan is coming, so I wish everyone a blessed Ramadan. And
yeah, likewise,
advantage of the
Ramadan
time.
Mubarak for all you guys too, man. I hope you guys have a great Ramadan. Focus on your ibadah, focus on your religion, inshallah. So But if you do want to reach me, you can reach me at WhatsApp. I'll throw my email address in here. This is just for your questions. I'll do my best to answer it. I don't know if you guys are you guys all in that WhatsApp group of if you're not, let me see if I can find the link.
No, I'm not in your WhatsApp group.
Okay, hang on, let me find the link. Invite. Copy link. Yeah, this is it right here. So this is a WhatsApp group that was created by another brother. I'm just an admin there, so I help out. So the conversations differ. So, but this is where a lot of the brothers talk. So if you want to join it, no problem. They share some ideas out there and stuff. But yeah. Yeah, guys, thank you so much for attending. I hope you have a good rest of your Sunday. I'll post this up in a few hours. Again, thank you. Take care, guys.
Thank you.
Have a good one.
Jazakallah khair.
Thank you so much. Appreciate it.
Thank
Islam.
you.
No problem. You're welcome.